Hello, everyone. I want to welcome our viewers from investing.com. Hi, Brock, Phil, Vikram, how are you? I want to start off with gold. I'm viewing this as a bear market rally. We held this 1695 level. How you doing, Shahab? So we're about 38% back here. 1730 is about halfway back. You can see this trend line would tag it there, and then you get up towards about 1737. You have 61.8 or so. I'm wrong on a close by tomorrow over 1740, and the reason for that is the 2-week off number. That's where it is. So you just count back 2 candles, and 2 Fridays ago, that's where we closed, 1741 to be exact. Oh, thanks, Gigi. Okay. Thank you, Gotham. Okay. I don't think the yen has topped. My view is that we have a little bit more to go on the upside. Here's my picture. Okay. So to me, this wedge still looks incomplete. And we could trade up towards 108.5. All right, so that's my view on yen. I don't think we're there yet. Something very interesting. And now this is S&Ps have made successive highs, but we are diverging on the 4-hour. We're diverging on every time frame. But the interesting aspect of it is, keep this picture in mind. NASDAQ is about to make its second lower high. Okay, so something for you to think about is, what was the strength on the way up? That's right. It was tech, NASDAQ 100, right? So what's lagging now? So the leadership is beginning to lag, and I think the strength has been the Dow, followed by the S&P, and then the NASDAQ, even the Russell acting better. So, I consider this kind of a bearish event, when what was leading you up might be leading for a correction to the downside. Okay, we had Peter Goodburn on yesterday, and he's talking about a correction that could take us down in the NASDAQ. I believe he was talking 8,500 or so, back down here towards these moving averages, this 8,400 level. Things are okay, Pete. Currency-wise, the euro's flirting with this 110 breakout, but look at this. So we had a 3 driver here before a pullback, 1, 2, 3 pullback. And if we get one more shot up, well, we actually had one here. We're getting some non-confirmations here as well. So I liked the euro down here and here, but up here, I'm not sure. Here's your weekly. We're right up against this 200-day again. Oh, this is weekly. 200 week comes in at 110.50. I can't say that euro's doing anything wrong. It definitely looks better than cable, and euro GBP is bearing that out. It tried to pull back, but we're right back at the highs. So that's telling you, as long as we're heading up, and maybe we're going to 91, 91.70 is 61.8 back from this big pullback. So with EG not being done, euro remains your preferred long. Dollar bear flows, so euro must go up. Okay. Well, like I just said, Alberto, I'm a little more conflicted on the dollar. Okay. Well, Pete, on S&Ps, I think it could be pretty, could be deep. I mean, why can't we pull back to, here's really the levels. This I know for sure. At the beginning of the week or last week, I said I think we could blow through this triple top. And if we take out the triple top, look what it held yesterday. Okay. So one thing what's your takeaway from yesterday? All right. So I knew this would be an important area and it turned. And now the moving average on the 4 hours coming in right there, 29.80-ish. So if you want to do nothing and wait for this breakout to negate itself, that's, down here about 60 handles away, 70 handles away. So one takeaway for sure is this is important. Just like this is important, this support level. Okay, this is very important. So I think that's all. The one trade that worked pretty good this week was I was looking for a 3 drive to a top in the crude, which we had here. It was pretty classic, grinded for a while, but you see this high, and what was here? This was a prior high. So, you had your high here at 427, and it took a while. Didn't quite do it here, but here it did it. 478, and then this high was 464. So, people thought they had the crude top here, put their stop over this high. It took out their stop by 15 points, and now it's a buck underneath it. So this still could be a failing rally in crude. I would say that good chance we had put in some type of top. I think 28 is viable in the crude. So still looking to sell rips here. And this is the best trading suggestion I could give you guys, is to sign up. I'm going to have Joe put the link up for our trial and work with the best team I've ever worked with. So what we do is we share our hard work and analysis 24/6, and you share a little of your capital as a thank you for the hard work that we do and to become part of this community. We have a members chat room that's going all the time. Towards the end of the week is really a good time to do it because you have the whole weekend to learn to navigate and check out all the resources you have. Download the app for both your tablets and your cell phones so that you can receive our push notifications. And I think that's about it. You can see, I'll just show you a little bit, quick tour. We call this a dashboard. You also get this data flash, which is very close to and sometimes faster than Bloomberg. And then you get all these different disciplines. You get Elliott Wave. There's a weekly look. This is conventional, basic technical. And you could take a look at the Elliott Wave pattern. Greg is still thinking we have maybe till 1:12:30 on his 4-hour count. Andre Cardoso does harmonic work in it. Okay, so that's where you see your butterflies and your crab patterns and cipher patterns and bats. I don't know if we should talk about bats with what has happened because of them, right? Okay, so with that being said, become part of our community. You could always just take a $1 trial and have full service for 10 days, just to give you an idea of what we do here. Not happy with the trial, I'll refund it. So Blake, we're starting to wrap the week up here. Dollar indecisive, but looks like it's trying to turn. You think we're going to get a breakout here in Euro? What's your
Yeah,
bias?
I mean, we're trying.
Yeah.
So let's talk a little bit about. Well, I'm gonna take this opportunity actually to discuss just a few things.
Okay.
Um, First of all, I was just talking to my office just a little while ago about the euro, the strength of the euro, and surprised it wasn't a little higher. That was basically the gist of the conversation. The problem is, as the euro is trading up against resistance, is that if equities turn lower from here, which this we could probably have the same conversation back in November of last year. It's like, okay, well, if the stock market ever turns lower, the problem is the euro, the correlation that is definitely in play right now is the dollar will strengthen on equity market weakness. And so when you have the equity markets that have rallied this far off of the lows, excuse my allergies this morning, it just, my nose is kind of stuffy here. When we've rallied 40% off the lows, it's a bold statement to say that, we're going to rally another 10%, towards 3,200 or towards the highs that we were at this point. So the risk is if equities start to turn lower, the dollar is going to catch a bid. And so being long the euro up here, given the fact that we're right at the 200-day moving average, we're just above it. Given the fact that we haven't rallied more based on the news that we've gotten is surprising. And that's not to say that I wasn't trying to bid euros overnight. I actually had bids out there. Matter of fact, last night was one of those nights where none of my orders that were open got triggered. And so I got up this morning and, I'm just kind of flat and nothing. And one of the things that was probably most frustrating is that my dollar Mexican peso ad, I had a 22.25 bid right here. And, for JP Morgan, I don't get triggered until the offer or the ask gets to my price. And so, you take a pair like the US dollar Mexican peso, the spreads are pretty wide, almost like 80 to 100 pips, depending on, the time of the day. My offer wasn't, obviously triggered. And so I never got hit, which was a little frustrating because when I got up, we were at 22.35 and I'm like, oh, I would have just, taken a little bit off there. But anyway, needless to say, like I had a euro bid last night at 109.50, and it's still there right now. I'll remove it actually probably after I'm done here, because what I was trying to do is take the euro dollar. I was hoping overnight we would have dipped like that and I would have gotten long. So I try to and I'm going to take this opportunity to talk a little bit about, this is where your chart reading skills come into play, and this is where ForexAnalytix, in my opinion, this is where it's going to be valuable to you, amongst other things too. But let me give you an example. Maybe something I wrote last night. Here, this would be an example. The Aussie dollar failing at the top of the resistance zone and closed below the 200 DMA, right? Only back below the 65-60 level would be bearish near term. So in other words, it's bullish, from a basic technical analysis. Now you might see that it's neutral here, but based on all the charts that we've posted, it still comes out with a neutral rating because there's been a lot of flip-flopping back and forth as we've been, channeling up here. But what that would tell you is any dips towards 66, 65, 60 would be a long, you know, because it's while we're above there. So overnight we did dip to 65.88 and right back up again. So, you know, if you read into that analysis that I wrote, it's like, okay, use those support and resistance levels to play off of. You know, for me, let me see if what I wrote last night for the euro dollar. The euro dollar is trying to break the 110 level, but the 200 DMA is capping the rally this far. A move above the 110.50 would be needed to confirm that the rally is underway towards the 109 or 110.92. I didn't write what I was exactly what I was thinking before I went to bed last night. But before I went to bed, I'm like, okay, as long as we stay above this trend line, I want to be long. So what I was trying to do is I was trying to buy the euro if it dipped down to 109.50. So I put orders out overnight in the market to get triggered. And if they get triggered, it's because I envision what I think is going to happen, and I play the market like that. You hear people like myself or other traders out there that always give you the, you know, the comments, you know, let the market come to you, right? Hold on really quick. Let the market come to you. You know, let the market come to your price, and if the market comes to your price, then you get long. So what or short. So what I try to do is I try to go through my charts and say, okay, well, you know, with that being said, what I'm hoping for is that we dip down to here to now it's 109.60 and I can get long right around here. So I'm not willing to buy the euro at this price, but I am willing to buy it down here, because if I get in at this price, then my stop is right here and my target is back up here or higher, right? So the way I approach the market, especially overnight, because I'm not around to trade. You know, I'm not in front of my computer. Obviously, I'm sitting, I'm sleeping. So I try to, you know, stagger my orders to where if it drops to the price that I want, I will get long or short, and that is an example of what I'm trying to do. And then another example overnight was the Euro Aussie. I have very small exposure right now, long, but what I was hoping for is we'd get a quick dip, because I knew that the Aussie dollar is up against resistance. Okay, so and I'm generally speaking bullish the euro right now. So what I was hoping is that we'd get a dip down here towards the 618. Whoops. The 618 retracement, and I can get long the euro Aussie here, knowing that there was, you know, this breakout point here. I can put my stops down here and look for a move back up here overnight. So what I was trying to do is get long down here, stop here, limit there. And I try to put orders overnight when I'm sleeping to take advantage of the markets like that. And that's the kind of stuff I do intraday too. You know, intraday, when you get my analysis, when I'm looking at the markets, what I'm trying to do is I'm trying to find, you know, areas of interest that I think I would be willing to participate in that particular currency pair. Here's a good example. Dale, are you still here, or did you have to run off? Sometimes he runs off. Looks like he ran off. Okay, so this is another example of something that I was trying to do overnight. Here's the dollar Canadian. Now, in the dollar Canadian, I was talking to ADS in our chat room last night about this, and he was talking about this being a possible 3 drive, and he's like, I can hear Dale's voice right now talking about it. This is an example of a currency pair that I was going to try to buy overnight. Right now, the reason why, and let me just show you. Okay, see this fib, 127% extension right there. See this fib, 127% extension right there. See this fib, 161% extension right there. So what I know is we have a lot of support right through here, and I know that based on what we've got here. Wait, hold on. Are we seeing some movements in the market? No, we're not. Okay, just checking something. we have this channel. So what I was hoping would happen overnight is we'd get a brief dip to new lows and then a rally back to, to the breakdown point. So I have an order and it hasn't gotten triggered, and I don't know if it's going to get triggered now, but I have an order to buy the dollar Canadian, down here on a dip, and it's counter trend because I knew it's going, against the trend. I wanted to get long and then sell it once it got back to the 138.50, which is the breakdown point. Now, I don't mind being on the long side, but because I know I'm going counter trend, I just take smaller positions. So anyway, that's just an example of something that I was attempting to do overnight, but just, again, didn't get triggered. But I hope that makes sense to you guys. I try to use my chart skills of, looking at the markets for, 20, almost 5 years, and 24 years actually this year, and just and try to be at I want to be at the places that I want to be involved in, the places that I know that we're going to have some sort of pivot technically. Now, one of the things that I want to also talk about is something that we discussed yesterday afternoon on the Daily Roundup webinar, is a possible pairs trade. Now, and I was discussing the NASDAQ and the weakness of the NASDAQ, and how we're going to probably see a shift from out of NASDAQ into European equities based on I have to say, the quote unquote fiscal union that we're kind of seeing with the European Union, because it's really not that yet, but we're moving in that direction. I was thinking, okay, well, let's look to sell NASDAQ, buy the DAX. Now, if you're selling the NASDAQ, buying the DAX, you're playing on an idea that the European markets, like the German DAX, is going to outperform the NASDAQ. It ties up some equity, but you're basically hedging yourself, because if the markets fall, like let's say the global equity markets fall, the expectation is the DAX is going to fall at a slower rate than the NASDAQ. And like last night, even though the markets didn't really do a whole lot, you can see the NASDAQ's down, but the DAX is still up. Okay, and if the DAX comes down like this, the NASDAQ might come down like this, right? Or the flip side, and then that means you would lose less in the DAX, make more in the NASDAQ. Or the flip side to that would be if the NASDAQ went up, okay, the DAX would break out. All right, so that's a way to trade when you know that there's rotation going on in the markets, which I feel that there's rotation out of there's more rotation into growth and out of some of the high beta. And if the market feels that the German or the European equities are going to perform better than the NASDAQ, that's the way to play it. It does tie up a little bit more equity. You can do it via options. You can do it via just straight up positions. But I do think that the NASDAQ is going to be the underperformer moving forward. So that's just another idea of something that you could do for those of you that trade equities. But again, what I'm what I'm trying to illustrate here is just some different ideas of things to do in the market when overnight the market's really quiet. But we do have to also keep in mind that the NASDAQ is kind of leading the charge lower at this moment. And will that drag the rest of the indices down? It's entirely possible. So just have a little bit of awareness that the NASDAQ's kind of drifting lower at this stage in the game. there was one other thing that I was going to discuss, but anyway, I'm going to bring in my colleagues Steve and Stelios and see what they have to say this morning, because it is a fairly slow morning as far as the FX market goes. Well, actually, as far as every market goes. Oh, one of the other things I wanted to talk about before I bring them in. I have seen some preliminary reports. Later today, I'll have a better idea. And if you're on the Daily Roundup webinar, I'm sure I'm going to get a bunch of emails and analysis from all the banks as far as end of month flows. But they're a little conflicting right now, because what I'm hearing is we're going to have dollar weakness, but we're also going to have equity market weakness, which doesn't jive. It's going to be hard to see equity market weakness. 30 billion in selling is what the preliminary numbers that I'm hearing. If you have equity market weakness, that would actually usher in some dollar strength. So to have dollar weakness and equity market weakness at the same time is not something that I'm sure how to take advantage of personally at this moment. But I think that if that's to be the case, the currency pair to play in an equity market sell-off, let's say there is 30 billion to sell, and it starts, some of those flows actually start today. You got to play the Euro Aussie to the upside, because if you see dollar weakness, it's probably going to come through the euro and not so much through the commodity currencies. And given the fact that the Aussie is so close to the 200-day moving average, we're kind of challenging and struggling there. I'd play the Euro Aussie to the long side if equity markets start to show some signs of weakness the next 24 hours based on end of month flows, because you're probably going to get dollar weakness against the euro, but not so much against the Aussie, which means that the Euro Aussie would be a rally candidate, and especially in a situation where we have, hold on, did I really just, hold on, I got to look at something really quick. Oh, shoot. I didn't mean to do that. All right, hold on. I got to, okay. All right. But anyway, just some food for thought on how I'm looking into the end of month. So Steve, Stelios, good morning, gentlemen. How are you guys doing today?
Good morning.
Good morning, everybody.
Morning. It's a pretty quiet day right now.
Yeah, but we do have data coming out, quite important data coming out.
Data Schmeda. Does data actually even matter right now?
Of course it does. The worse it is, the better it's going to be for the stock markets.
The worse it is, yeah, exactly. Exactly. So we do have a little bit of data. We got weekly unemployment claims. What else do we have going on this morning?
Second look of the first quarter's GDP.
Yeah, so preliminary GDP, right?
No, that's not the preliminary. It's like the advanced. It's like the
advanced GDP. Okay.
Yeah.
Got it. Well, I'm going to let you guys take over ahead of the data, but I want to thank everybody for being here this morning. I know it's kind of slow, but that doesn't mean that the rest of the day is going to be slow. So just keep your eyes and ears peeled. Get ready for hopefully some action today. And if you're not a ForexAnalytix subscriber, if you're not listening to the Daily Roundup webinar or the European crossover webinars overnight, that's because you're not a member of ForexAnalytix. So make sure you try us out. It's only $1 for 10 days. Download the mobile app, so this way you have all of our analysis right at your fingertips. And even if you use the light version, which is only $19 a month, versus the premium version, you at least get to try out the premium version for the next 10 days. So make sure you give ForexAnalytix a whirl and jump in the chat rooms.
I grabbed the screen, Blake, because we have data in 3 seconds.
Yep. All right, guys. Hey, good luck today.
Bye-bye,
Blake.
Thank you, Blake.
See you guys.
Okay.
So we get durable goods orders as well, but really the main thing is jobless claims and GDP. But jobless claims,
and once again, they're late with announcing the data. I mean, it's
no. It's 5 seconds from now. It's not 3:30.
Really?
It's not. It should be out now.
Perhaps yeah. Perhaps the clock here is out of sync.
So
we
jobless
already
claims
got
as
durable.
expected. Durable goods much better than expected. Still very negative, but better than expected. GDP, I'm not seeing it yet.
Yeah, we don't have it yet. Let's see. Yeah, -5%.
Okay.
So first quarter GDP -5%. This is the second look, so it should be rather reliable now.
Yeah.
You know, we're officially in a recession because the only question about the second quarter is how horrific the GDP number is going to be. Estimates are all of them in the double digits, I think, Stelio, right?
Yes. The Atlanta Fed, the model, which is very accurate usually, I think at some point was showing like -20 or something, pretty horrific. Yeah. So let's see how that goes. Interestingly, the jobless claims number is slowly coming back down.
Stelio, soon enough, they're going to start running out of employed people.
Yeah, true.
I mean, this is what, the 9th week that on average we're losing something like 2.5 million per week.
Yeah.
So, yeah, I mean, actually, to be honest, the average must be around 3 million, because don't forget we had like a couple of prints that were roughly at the 6.5 million mark, right?
Yes, correct.
Yeah. So
well,
I mean,
like you said, we're going to run out of employed people, and I was reading today, Amazon, they're offering full-time jobs to part-time employees that they hired over the past weeks. And I think the number was something like 150,000 people. So, there's going to be some demand for sure. But the question is at what pace? And obviously the quality of employment is always important. And that's what's characterized the shift over the past decade or so, where you had lower unemployment, so more people working, but the quality of employment was declining quite a bit. You got more muck jobs and lesser skilled, let's say, jobs, and much fewer specialized jobs. But anyway, this is something we need to keep an eye on. We also had the Canadian data, current account, quite a bit worse than expected, but in these times, I think that it's not really going to move the needle that much.
No, it isn't.
If we had this number, for $10 billion worth, difference in terms of current account, that would have been pretty big, a year ago or more. But nowadays, it's not really that much. What else is there to say? We had a couple of interesting comments. One was from the French, the Government Bank of France, Villeroy, I think you pronounce his name. He's also a member of the Governing Council of the ECB, and he said that negative rates are an effective policy tool.
Absolutely, very effective.
So
that's why we're stuck with them, because they're so effective, like quantitative easing. If quantitative easing was effective, we wouldn't have been counting rounds of quantitative easing, 1, 2, 3, 4, 5, and we've lost count nowadays.
Yep. So I think, you were starting to get comments like that from pretty much everywhere. We had the Bank of England, Andy Haldane, who said that they're not looking into negative rates right now, but, overall, it's not out of the question. So I'm guessing they're preparing us for negative rates.
Something, nothing would surprise me from the central bank that decided several years ago to sell all their gold reserves. So, after that, I don't think there is anything that could come from the Bank of England that would really surprise me.
Well,
I mean, they managed to sell their gold at, what was it, Stelio? $300? $200.
Yes. It depends what they did with it, right? If they bought Bitcoin,
brilliant.
Well. Anyway, so that was an interesting comment from one of the key people in the ECB, and I think we're in for low rates and QE for a while to go, unfortunately, and debt monetization and all that they said they will never do. So I think that's what's going to continue.
We've started getting also some comical comments. I've seen like 2 or 3 of them saying that, they're going to unwound the balance sheet, once the emergency is over.
It's amazing, right? The Fed tried to some quantitative tightening for a little bit and just
for a few months, and the system blew out. I mean, they had to inject the repo market before the coronavirus with something like 600 billion just to keep it from imploding. But other than that,
let's not forget, like you said, that this all happened before the virus started. You know,
Yeah,
the whole
absolutely.
So and again, also, you know, every time they try to do any little tightening of any form, it just cannot be sustained for one reason or the other.
Of course, the market is like a junkie. You take the drugs away now, it goes immediately in withdrawal symptoms, you know, and they're very severe because, you know, it's been taking drugs for so long at, you know, such large quantities that, you know, withdrawal symptoms, you know, come immediately the moment you start withdrawing.
Yeah.
Well, guys,
So,
you know, now that we're reaching month end, I think we could safely say that sell in May and go away was not a good strategy. So now
still
that the
May.
shorts have now that the shorts have been squeezed, their heads squeezed so hard, their eyeballs are popping out. Could we be setting up for a June swoon?
Listen, if we had that, you know, we had that viewpoint yesterday with Peter Goodburn as well. You know, a lot of people are talking about a rotation, you know, out of the stocks in essence that performed well during the lockdown. Now that the economy is going out of lockdown to, you know, sectors that were suffering during the lockdown, and that might be the case. But in my opinion, I don't see easy any path forward in which the Nasdaq fails from here. I think that everything is going to suffer along with it. You mentioned it at the beginning as well, Dale, and I totally agree. So, in my opinion, this ascending wedge here in the Nasdaq is probably the most important chart at the moment.
Yep.
Yeah, I mean, when's the last time you've seen successive new highs in S&Ps without the Nasdaq 100?
Yeah,
That's a little bit of a
It's
tell.
definitely been a long. It's definitely been a long time. There's no question about it.
I think, like, personally, when I look at the S&P in particular, where you see that for a few weeks now, there have been literally no pullbacks at all. You know, there's been one day maybe where it drops a little bit, but then straight away it's being bought, and that's, for me, is a hallmark sign of short covering. I wrote on the chat room this morning, I've started very, very slowly, like a quarter position, finally started shorting the S&P. 3050s was my level all along. I started there, and I'm going to just watch price action now. The other thing is I'm seeing, and I'm sure other people are seeing it as well. Jane actually wrote this here on the chat here, that you're seeing a lot of people who were bearish go bullish now in equities, and that for me is
it's quite a worrying sign. Yeah.
But anyway, look, we've said it before, these things could squeeze higher, of course. But I think risk reward at these levels, especially looking at the Nasdaq chart as well, that you pointed out, risk reward at these levels, I like being short, and that's why this morning I started very, very slowly shorting and see what happens. Don't get me wrong, I think in the long run, equities are going to be a lot higher, but I think we're due for a pullback, a pretty decent pullback as well. Now that the market's pricing all the good stuff, virus being eradicated or a vaccine, found, and people going back to work and everything going back to neutral, to normal. Actually, good indication is we had some data today. Is sentiment and consumer confidence out of Eurozone, and in Italy, consumer confidence back to nearly 100, which is the long-term average of the last 10 years. So it's like nothing happened in the last couple of months. Forget about it. We're going back to normal. I mean, I fail to see that, but
Yeah, I agree. It's very unlikely. I think that the market can, remain happy for a period of time because there's no question about it. We're going to get some, in isolation, some extremely good numbers in third quarter because, of course, when you measure the rebound from the worst set of data that we had probably in history of economics, right? What we had in second quarter, that basically the economies were like some of them completely locked down. So I bet we're going to see a lot of euphoria in Q3 as well, by seeing big jumps higher until the market realizes that, yeah, of course you're going to get big, good numbers out of a period that everything was in a lockdown. but that's not going to be enough to take the economic activity back to what it was, prior to COVID. So I think that it's likely that we're going to see disappointment near the end of the year when they're going to realize that the follow through, for example, in fourth quarter is not going to be what they expect. And, when the market has to start pricing in that COVID was not like a 3-month disruption that can be erased like it never happened. Even if we exclude the huge pile of debt that will have been accumulated, even if we say that that doesn't matter, which of course it does, still we're not getting back to what it was before that.
Yeah, I agree. And our friend Alexander says there's also a good chance for a second wave. Of course, that's there is a chance of that.
Not even to mention the risk of something like that, Stelio, because the market is pricing in perfection again. It was pricing in perfection like last year. It is now pricing in perfection again, like that everything is going to go back to normal and better than it was before, like nothing happened. So imagine if there is a comeback in fall, and economies have to go even into partial lockdowns again, right?
Yeah, I think the counter argument to all this, which makes sense, is that equity markets don't reflect economic environment anymore, and that's true because you have a huge buyer. You have the Fed just scooping up everything, and other central banks, so they are distorting what we know in terms of correlations between equity markets, debt markets, and the global in the economic situation. So that's the only argument against this whole thing that we talk about.
Until of course it stops being the case, because at some point we know that it's going to stop being the case. Of course, fighting the Fed is not a good idea in the sense that at some point this whole endeavor, this whole experiment is going to fail miserably. But until that happens, it's painful being on the other side of the market. That's why I've said, and I think that the best long-term trade, and we've been saying that for quite some time, is a trade that is actually going with the Fed and with economic logic, because it's one of these cases that the two, in essence, agree with each other, and it is buying monetary metals. Because simply, both economic models and what the Fed is trying to accomplish both point to higher prices in metals. So I think that, if you want to be in a trade that makes fundamental sense and at the same time not fight the Fed or, all the central banks of the planet, that's it. Speaking of which, and it's a good segue to jump on the charts, silver is still here consolidating. I mean, hasn't really managed to suffer. And, this looks to me like another triangle or whatever. So I would expect that another leg higher from here should soon follow. Even gold found support again in this support resistance area. I would have assumed that there was a good case for it to correct lower from there. But even if you have a look at the 4-hour chart, here it is, but let me pull the right chart that has analysis on it. Here it is. So even if you have a look at it on the 4-hour chart, this pullback looks to me like perfectly channeled. So we failed just a bit earlier from this channel trend line resistance, passing from 1725 or whatever. But if we actually manage to close above that, I think we should be looking for higher prices. So this is a key area. I mean, you want to be short gold here in the short term. This is the place you want to be shorting it, but be careful, as I said, because if we actually break through the channel again, it's another orderly pullback that will have been resolved in the direction of the prior trend, which is higher. So, I know that it's overbought. I know that it's diverging in several time frames, but it has been doing so, and people are trying to short it. Wait a second. Merkel is on the wires. No, her comments were more about the IMF, so forget about it. It's nothing, actionable at the moment.
She shouldn't be walking a wire. Too old.
By the way, Dale, since we were
I hope
talking
she
about
has a safety net, huh? What?
Speaking about gold, just also notice here on the daily, if we close around these levels, we're likely working on a morning star formation here in gold. So I wouldn't be I wouldn't be writing it off like it's done, it's already posted the high. I would be very careful here.
Yeah, and
in
you
any
close
case,
it over 1740 to go with you on that.
in any case, dollar perfectly tested yesterday this triangle trend line support, rebounded somewhat from there to close, almost unchanged on the day. So far today, the dollar has been doing nothing. It's like a tiny candlestick, an inside candlestick. So keep in mind that as long as we're not breaking through this trend line support, there is no technical event here. And the same applies to the Euro USD. I said yesterday very specifically that, look, the Euro might actually squeeze people higher as long as it closes the day above 110.20. And we didn't do that. And so far, we haven't done that yet in any case. So, we traded higher today earlier. But, all I care about is how we're going to close the day once again. Because we're seeing clearly that this area of resistance is quite important. There is a lot of selling interest here. Now, if we do break higher, I think that a lot of people that might have been short are going to be, paring back the shorts, and that on its own should be fuel for this market and for a move lower in the dollar. But keep in mind that a combination of some risk off whenever that starts, with Euro USD not managing to close above 110.20, should get the DXY rebounding higher once again. So pay close attention to that. Blake already mentioned that the Aussie USD is finding resistance at a key resistance area. If you remember, we've had a look at this area. I had been saying for a long time, for many, many days, that watch out for the 66.60 to 67 cent area in the Aussie. So far, it seems to be holding, and that's important. Same deal here with the Kiwi. Look at the Kiwi, still trading within this likely ascending wedge, and as long as it doesn't cross over it, I would be very, very careful in being long here. I mean, this is already a mature rebound, but looking at the RSI being at 60, I would have to say that this is a perfect area for the Kiwi to fail as well. So all that is needed for all these pairs to actually turn lower, look at the Aussie yen as well. I showed this yesterday, I think just after the webinar or just before the webinar, something like that. I showed this yesterday in the chat room. I said that, be careful here because look at the Aussie yen. As you see, being capped by this ascending wedge, the 200 daily moving average is just a few pips higher at 72 cents, 72.08. So, if we get any, any signal from the stock markets that, participants think that they're overdone and they start rolling over, even, for a few days correction, all these currency pairs should fail and should, get decent moves to the downside. Now, have we seen the low in stocks? There is a decent likelihood. We said that since a few weeks ago. But in any case, I would expect that in order for any buying to happen, you would need to see something like that. You would need to see much better levels. You would need to see a pullback, I would say at least towards like 27.30, if not 26.30, 26.40. 26.30, 26.40 is my downside target. The higher we go, the more likely it's going to be that I'm going to settle for something like 27.30. But, clearly it makes no sense trying to buy it here. I'm not going to mention valuations and all that. We've had these discussions in the past. You know, none of that makes sense. You know, this is a market driven purely by FOMO and you know, quantitative easing. But even from a technical perspective, you know, in order to be a buyer here, you would need to see at least something like 2,700. Otherwise, it doesn't really make sense. Now, having to do with the cable, we spoke about that the day before yesterday and yesterday again. You know, I would be a little bit careful here. So far, the rebound is not showing anything more than a corrective move and has stalled at the back test of this broken head and shoulders formations neckline. So as long as we trade below like 123.50, I think that the risk reward favors short positions. Now, above that level, you know, it's a totally different game. But from a risk reward perspective, considering where we currently are and, you know, this area of resistances, you know, I think that, you know, looking to the short side, you know, makes sense. Add to that the fact that, as we said before, the DXY is at support as well, and you know the pound is part of the DXY, has a decent chunk in the DXY. Nothing, you know, as close to the euro, but it's still a part of it, right? So you know, combination of those two, pound USD being at resistance, the DXY being at support. As I said, the risk reward ratio would favor short positions from here, because even if you're wrong, you're risking very little. You're risking something like, you know, 50, 60 pips. And if we roll over from here, we might actually complete this head and shoulders formation that is targeting 118.82. So, you know, the risk reward ratio is, you know, excellent actually. Now, let me go through some of your questions actually before we continue, so I can cover some of your thoughts as well. There's a question came a long time ago about the euro yen, so we can as well have a look at it. I've already covered it that during the previous days. The first bullish sign here was the break through this trend line resistance. But I said yesterday, I think that, you know, you should be careful because this 1960 confluence, triple, quadruple confluence of resistances is very key. And since we're now rather close to it, you know, I don't think this is the place you should be buying it anymore. I'm not saying that it can't move higher, but I mean that, you know, being so close to this key area of resistances, in my opinion, the risk reward ratio does not favor longs anymore. You could look into buying it if we see another pullback, like towards 117 or whatever. Or alternatively, if you see a breakout through this 119.60, you can buy the breakout, at least, you know, having a much better, you know, having much higher confidence that, you know, this is legitimately extending to the upside. Hi all, would I like to ask one or more of your mails to ask for possible business proposal if achievable? It's not spam. You can check my LinkedIn account for Enrico Michel, bond trader for more than 30 years in London. Yeah, absolutely, Enrico. Let me type the answer. Here is my email address. I'm one of the co-founders of ForexAnalytix. I'm going to forward anything you send to me to the rest. There you go. So I already answered that, giving you my email address. USD INR and Nifty and USD SGN. I'm going to have a look at those exotics in a while. Let me finish up by covering the majors. Belated happy birthday, coach. Yes, once again, happy birthday to Dale. He had his birthday yesterday.
Thank you.
Okay, Joe, went long Euro USD here now, says FX Trader. Seems dangerous to me because you're buying it right on resistance. I'm not saying it can't work, but you know, you're buying on resistance nevertheless. So, you know, just keep that in mind. Dimitris, hello, Steve. What do you think about the put call ratio when looking at S&P 500 trades, and how do you use it? It is at a very low. It is at very low levels right now, that means that most of investors are short. So that's positive. Listen, so here is the S&P, and the put call ratio is PC. So if we overlay the inverted of put call ratio, there it is, you're going to see that the relationship is actually the opposite than what you said. The call put ratio, so if we inverted, the call put ratio is correlated with how the stock markets are doing. Okay, not the put call ratio. The put call ratio is inversely correlated, right? So when we see extremes, you know, it works oppositely. So you can see it here on the chart actually. So you see that there is, a rather decent relationship. So that's my answer, and it's one of these tools that you can use in the same way you would use the DSI, the RSI, meaning on their own, they're not tools that you should use to time a reversal, but once you have a nice technical formation, it helps to check all these things and see, for example, if you have extreme sentiment, if you have an extreme reading in the put call ratio that shows, complacency or extreme fear, to see if, momentum indicators are like, very strong, in which case, you should be, you should also be careful that, we're overdone, so we might, snap back. And sometimes, these pullbacks can be like pretty nasty, even in the best of bull markets, or the opposite. The rebounds can be, very strong, even in the fiercest of bear markets. So that's how I think you should be using the put call ratio. Okay, as another tool to give you like confirmation and nothing more than that. So you should build initially your trade based, on a technical reversal. For example, if you're looking to be short in a move like this, and then see if those give you even more confidence in that. What's happening with gold prices? Are going higher and higher day by day? Of course they are. I mean, monetary policy is extremely loose. Monetary metals are going to be doing well as long as this is the environment. I mean, debt is has been exploding higher by the trillions on a daily basis, and the response from monetary metals theoretically should be moving higher and higher, and that's what they've been doing in essence. Would you guys say the SP is overbought with no pullbacks? Folks back to work. Yeah, it is definitely overbought, and it has had minor pullbacks. And keep in mind that we might not be at all-time highs, but as we've shown and said many times, since earning expectations have plunged, the valuations are at the highest levels we had in history, with the exception of the 2000 era, 99-2000 era, which everybody accepts that it was a bubble, right? So when valuations are at the highest they have been, just incrementally lower than what you had in 2000, that tells you all you need to know about it. Euro breaking out? No, I don't think it is yet. We covered that. Yeah, there it is. Might end up doing so, but I'm unconvinced for the time being. Okay, so let's finish up very fast with covering these exotics that we had a few questions about. So USDMXN, USDINR, let me go through them very fast. Do we have an interview, Dale?
Yes.
Okay, who do we have today?
Samantha. Leduc.
Aha, okay. So USDMXN, finding support at this, you can see it's an important level. Why? It was the high of 2017, which held until we finally broke out from it in March. So, you know, previous high, quite important. Also the 50% fib. So quite an important support area here for the USDMXN. Pay close attention to it. I have to say though that, and I said it some time ago, there was the possibility that this was a triangle, but what troubled me, and I had indicated that up there, was that we already had a higher high. So this looks to me like a head and shoulders formation now that we failed through the triangle. And I think there is a good chance that any type of rebound that we're going to get, even if it's because we're getting lower stock prices, which that's how it's going to happen probably, I think it might fail. Worst case scenario 2340. So I think that the USD MXN might keep on pressing lower, but risk reward does not favor you selling it here. Okay, so let me make that very clear. Now, having to do with the USD INR, I still see a triangle here, so I wouldn't rule out another high. By the way, Dale, one pair that we should be paying closer attention to, and we haven't mentioned recently, is the USD against the Chinese yuan that yesterday tested the all-time high once again.
Yeah. The market used to not like that.
Yeah, the market used to not like that. And it seems to be ignoring it at the moment. But I think, you know, we should definitely note that yesterday we did test the all-time highs to the pip. And so far we seem to be failing from there.
Is that a cup and handle or head and shoulders? Or
it can prove to be a cup and handle. Yes, it can prove to be a cup and handle. So if we clear 720 to the upside, I think there is more upside coming. I mean, a decent upside coming. One level I would be looking towards is the 161.8% extension of this pullback at 741. So, you know, there could be a lot more upside coming.
Yeah, I can't believe there's not going to be a correction of 10% or so in the market if that happens.
Yeah, also keep in mind that in essence, the US-Chinese deal, we mentioned that yesterday again, is dead.
Yeah,
right?
They raised tariffs again, didn't they? 30%?
Not only that, have you seen, I mean, the pledge for the phase one trade deal was China buying something like 200 billion this year. And last time I checked like a month ago, they hadn't even bought like 1/7 of that. And
you know, I don't know if it's true, but a friend of mine who's a trader, and I'd like to get to Samantha, told me that part of the trade deal, that there was a clause that it would not be enforced if there was an act of God or act of nature that created, you know, some type of global problem. Do you know that to be true?
Big conversation. So as you said, let's get to Samantha.
Well, I'm just wondering if you know if that's true or not. That was part of the trade deal. There was an out if there was, you know, something that no one was looking for. Okay, there you go. Raj is saying it included the word pandemic. How about that?
Yeah, even if that's the case, I honestly didn't believe that the Chinese would buy 200 billion this year. Let me put it as simply as that. And I think that phase one, as we were saying back then, was just a charade to keep the intoxicating aura of like risk on thing going on. I don't even believe we would ever get a phase two, and I don't even believe that they would actually stand up to phase one, irrespective of if we got a pandemic or not. So it doesn't really matter in my mind.
Okay. Anyway, it mattered to them. They added the clause. So we're going to go with Samantha. Now, Steve, did you wrap it up?
Absolutely.
Okay. Okay, Samantha, I'm going to get you set up here now. Welcome back to Face, Samantha. How are you?
Hey, good morning, Dale. How are you?
Good morning. Gosh, we haven't talked since we were in the middle of the market meltdown or had completed it. And who would have thought when we talked a few months ago, the NASDAQ would be pressing all-time highs. So if you want to go ahead and share your screen, Samantha, you just hit that drop-down menu, share screen, and we could see what's on your radar. See the green box.
Yep.
There we go.
We good?
Yep, there you are.
All
See
right,
your
good
Twitter
morning.
page there?
Huh?
I see your Twitter
I
page.
just have my Twitter up, happens to be.
Okay.
Yeah, no, we actually talked right in the middle of this craziness. I was a little heated and passionate that I had kind of come to the realization that we weren't just dropping a normal kind of 20% correction, but that we were in the midst of a crisis.
Yes.
So I went back and I looked at that video and I'm like, wow, you were kind of like intense there, girl. But I was very, that was my my mood, is that we were actually in a crisis. But you know, $8.5 trillion later by Fed, Treasury, and Congress, we have some stabilization, obviously. But today, I actually want to talk to you about this lovely rotation into value theme that's been basically intense and heated this week. A little unsuspected. Yeah. Guessing you probably weren't thinking I wanted to get on that track, but I was hoping that we could talk about that.
Oh, sure. Yeah, you mean like Russell, like, you know, all the unloved sectors starting to outperform the formerly loved sectors.
Yeah, back on Tuesday morning, I was really into this theme that the rotation from momentum to value was an outlier event. It was underway, basically. It was an outlier event. It needed to revert. Whether it was the perceived kind of economic recovery of you know, states going back into some sort of normalcy, or it was a time for just significant correction and valuations. But I don't know if you've noticed, but value has greatly outperformed momentum the past few days. It is rocking and rolling. And I mean financials, industrials, airlines, the leisure companies. And there are different, you know, ways to basically kind of measure small caps, if you will, and value plays. And sometimes they are the left for dead, you know, features. But
right.
You know, we also know lots of them. GM, I mean, just screaming higher the past few weeks, which was a really great breakout of some of these triangles and wedges. But then Macy's, you know, since Monday, Monday was a holiday, Tuesday and Wednesday, industrials, transports. I mean, transports has just been on fire. I mean, hot fire flames. So that's what I mean by the value rotation. Obviously, banks are screaming higher as well. So yes, this small cap move is something that I wanted to kind of talk about because I think it's got a little bit more legs.
Okay. All right. So, yeah, you know, I think someone showed a chart, Samantha. I'm not sure if you saw it, but before this happened this week, they were showing growth versus value. So yep. Is growth and momentum synonymous to you?
Correct. So MTUM is, for example, one way to track the growth. Okay. And when I, you know, wrote that, basically that tweet in response to someone, it is literally the MTUM is one way to look at it. Yesterday, it was a nice intraday bounce because it was on lots of levels of support, but it's represented in the FANG stocks, right? So you have, look at, you know, beautiful all-time highs, but it's poked, if you will, its head down below the 8-day moving average. And IGV, which is the software index, same idea. This is heavily weighted in Microsoft, but it's already tagged this trend line a few times. That's the 21, by the way, this little dotted white line. It's intonating to me some pressure, especially if we get a down move today and tomorrow. We will have a very bearish engulfing on a weekly. But you can do this for pretty much all of them. IPO, same thing. We've been, you know, moving higher. We came back down a little bit yesterday, almost tagged the 21. I think that's a magnet. You can look at FDN. It's another growth other than your usual, right? The NASDAQ.
Mm-hmm.
I'm just looking at particular growth.
I'm trying to remember from that chart when the last time growth over value was that extended. Was it 2008 or 2000?
Oh, no.
It was near historical highs, growth versus value.
Goodness, we've had it a few times actually. We had an outlier event right before the repo madness in September of 2008. So it really depends on like standard deviation move when it's just extreme, like you said. The bid in momentum has been unrelenting. Passive investing, the safety plays of the FANG, and then of course it's the new economy, the cloud-based,
right,
if you will. But this is still right now a rotation that I like and have, written about to clients and done a little bit of tweeting the past few days. But this to me is got some legs. Now some, and of course we're talking also the cruise lines, and are they going to actually survive or not? The luxury or the leisure brands, airlines, banks, small caps, all of that has been rocking and rolling. Some of them have some really good setups, like the Boeing last week that I was really intent that this would actually pop up, at least for a trade, and it's been working really well. But it has a lot to do also with yields. Are we going to get this type of, you saw the Boeing, that's a weekly chart, the Boeing kind of pop up, and that's a 10-week for those who are interested. Are we going to get any move higher in yields? We will see, but right now it looks to me like they're intonating higher, and TLT a little bit of a pull down, unless obviously we get a big market swoosh here. But I'm liking a lot of this value rotation, and it's been very profitable for oversold transports, financials, and small caps of all types of sectors.
So do you think that it's just a move of money moving into undervalued things, just a rotational move, or when you talk about things like cruise lines, that there's going to be a good outcome and not a second wave, and the worst of the coronavirus is behind us and the economy is going to have a chance to heal and recover here?
Yeah, I think there's a lot of perceived economic recovery. And, the market is obviously forward-looking and speculative. I also think there's some great value in these discounted prices. Now, we had lots of headline risk I wrote about for clients on Tuesday regarding, China. It's a big deal across the board. Also the dollar yuan, which you were just talking about at the very end of the prior interview. This is obviously intonating higher. It's a danger if it does. It bids the dollar higher as a safety trade, and it obviously would impact large cap more than small cap perceivably. So this to me is definitely the risk, but it's also the fuel for that rotation. Right now, I think the market rally was pretty clear on Tuesday that, we had some short covering. I mean, take a look at non-commercial net futures, all really low for past 2 years. We have definitely retail home and buying, right? So the Robin Hooders of the world. Yeah. There's some quant justification as well as it relates to, gamma strategies and buying begets buying, basically. So I think there are some good reasons under the surface for market structure to be rallying this week, and in particular why it's rotated from tech into value plays. But this is the Robin Hood, by the way. I mean, just intense hockey stick there for participation, because they're either working from home and have some extra time, or some extra, need to make money because they don't have a job. So that particular anomaly, if you will, of this rush, if you will, into new accounts is a big deal. But I think this violent rotation, and it's what I call that rotation from growth momentum into value plays, is also going to be a little bit of inflation, expectation, a little bit of a yield pop. if we do get some risk on here with China, then I think there is going to be resetting of some of these overpriced FANG stocks. But no question, I mean, there was just a giant, oh yeah, retail too. And even the news, which is funny, right? The short covering of these value plays is really what's also driving this. I should have said that first. There's a lot of short covering that's happening from hedge funds that have been beating down, you know, the trips and the Carnival Cruise Lines of the world. Of course, airlines. But this was just the percentage change on Tuesday from the open. That continued on Wednesday. Today, we still have pre-market so far elevated prices, retail, the transports. So I think that these are just due for reversion, and they're working.
Okay. So what do you do? Say, for example, you're flat the market right now. What tactically would you be doing? Waiting to buy dips in value and sell rallies in growth?
So it depends on the time frame. I have already been buying since Tuesday, tons of these oversold plays: FDX, Trip, American Airlines, Boeing, Gilead, Macy's. I mean, this is not a lack of, I got a few dozen positions in options open.
Okay.
It's stupid because they're just all percolating at once. So they're, very, very ripe for chasing and swing trading potentially. But this is what I'm looking at, big picture. I just put that out last night for clients, which is basically we've got this continuation. Retail also picked up a lot yesterday, but market neutral, this is momentum, this is value. There's a little bit of reversion going on. I think it's got some legs. And then when we have the stay-at-home versus back to business, metrics of here are the growth plays that have been doing great, right? The cloud, the IPO. And then we had just box office drop off the face of the planet for all good reasons. REITs, outlet malls, airlines, restaurants. This is an overreaction. So the market, I think, is now getting a little bit of a grip, right, on their fear over COVID and on those dumps, if you will, in these plays, and they're going back in. So for right now, I think that is the thing to watch. I like it a lot. Now, there are going to be also those who say, wait a minute, small caps are right now wicked expensive. And yes, the norm has been to buy the FANG. I'm not saying that is done, but it's a process. And even, yesterday I mentioned to clients, where is it? Okay, careful, a mad dash for trash is usually a good sign that we are at the tail end of a risk-on, bull-on, bull run in equity.
I was thinking that you don't think that's true?
I do.
Okay.
But I think it can last a while. I mean, take a look at this. This was a while.
Yeah, that was years.
This was a while, even though it was more dramatic. Yeah. Why is this going to be, repealed right away? I think we have some also big fish, whales coming in, taking activist positions in some of these oversold plays, like a Carnival. So I personally think this has got more legs. I don't think this is going to be a 1 week and done value rotation. And of course, I'm waiting to see what's going to happen with China retaliation, based on the Huawei blowback potential of the extradition, news that's going on right now in Canada. And the dollar is then muted, just totally in this incredible wedge. But I happen to be a dollar bull, so I think we're going to have some surprise here in the dollar yuan. And then that's going to add a bid, if you will, to the dollar. And that's going to also help reprice stuff. The other part of this is I am just fascinated by this particular chart. I don't know if you can see this really well.
I saw you tweet that. How long could it go on?
My gosh, right? This is unprecedented. This is the 2 and 10 year yield curve, right?
Right.
And this has got to come in. This is just not normal, natural. I know the Fed will keep buying treasuries, which is bonds. I know they're going to be bid no matter what, even if they come down $5 TLT. We know Fed is going to come back and buy them. But honestly, that's just a freak of nature. This is a rate of change in this bull steepener. I'm sorry, just for those who don't know, this is, we had this bull steepener that is bearish the market. That's when our market basically started to roll over and hard. It's also a sign of recession, although the red line is not in there yet because it's not been officially called. But nonetheless, that is a parabola that in normal, market terms is unsustainable. So that leads me to believe, I got it in there twice. That leads me to believe we could probably have a violent kind of pullback in TLT, at least into the mean. This is the channel.
150-ish.
Yeah, exactly. And that means we're going to yield a pop in yields. I don't know when, but I'm waiting for it.
Okay.
And this
there's some debate that there might be like one more if we got any kind of pullback in stocks that TLT 10-year notes could make a move back down towards the lows. I think the lows are in yields, but maybe a retest. So we'll see. But I agree with you. Isn't that the most crowded trade on the planet?
That too.
Long treasuries.
But look at this incredible move, obviously, in yields. And that's just talking, there's real yields too, that, with inflation versus what the forward futures market is pricing in for negative. I'm not there. I think we just get a yield pop. And then, of course, the Fed comes back and then, hammers it down. But this is getting way, way too, from a technical standpoint.
Very quiet,
Way quiet and way coiled. So
a lot of compression.
A lot of compression above, the 3, the 8, the 21 day. It has a great chart set up on a weekly for a pop. I guess it wouldn't be perfect, but if you look over here on the weekly, this lovely scoop, here's the 10-week, looked a little bit like this Boeing, which is kind of moving higher too into the 10-week. So I'm not talking about a ginormous yield move, but I do think that that's going to re-enter volatility.
Back to 120, 140 on the 10-year?
I don't know if it's going to go that high right away. I think, can we just get to 0.8?
All right, I know.
let's just
you don't know how many times I've been a boy crying wolf. Okay, the 10 years turning. We're breaking out, and then we don't. We're breaking out, then we don't. So
exactly.
I know we're close because I've had positions in TBT for about 2 months, and not that I've taken price hits, but just it tests. You know what these markets try to do to you, Amanda? Excuse me, Samantha, is wear you out.
Yeah, shake
and then
you out.
The minute you say, you know what? I'm just tired of it. Then it goes. But they try and wear you out first, don't they?
They really do. And honestly, that's their job.
That's their purpose. What a mean guy.
And I am short TLT, so you and I are kind of in the same boat. But I'm very very intrigued by this chart as well, which is the small cap, and this is again that value play. For a long time, as you can see, this selection, if you will, we gapped up. And we had a little bit of a gap. This, by the way, is SML, so it's the top 600 in the small cap. I like to chart all kinds of things. I'm looking for something. And this one just gave me basically a gap that we needed to fill. So we did finally, in that March 35% downdraft. And we have not made up much distance, have we? We know that. Which is why I'm still of the camp that we're going to have a rollover in the market and, not do this V shape in SPX. We have in the Qs, but I'm talking about this small cap move, bullish above, bearish below is just, for me, very clear. And relatively speaking, in other words, small caps to the SPX, we took out the 2008 lows. Talk about oversold, wicked, extremely oversold. So to me, this is still good fishing, you know, until it isn't. And some of these charts also relational study work that, you know, I do, which is relative strength when I put like the transports against SPY. This took out, you can't see it because I don't have it far enough back, 2004 lows. So this waterfall then bounced this week. This is intense, right? This is the airlines, this is the railroads, this is truck transport, FDX, et cetera. This took out 2004 lows, took out 2016, you know, oil industrial recession time, took out 2009.
Yeah.
That's what I meant by an outlier, you know, ready to revert in some of these oversold sectors. And that would also include retail. This retail study down here, XRT to SPX, left for dead malls and such. Check this out. Relatively speaking, that was definitely where we fell off the cliff.
Yeah.
And we are back above this, I would call it kind of, I don't want to.
Looks like the LQD.
I haven't
like
done that one here.
The corporate bond chart.
No, I know LQD, but I haven't done a study with SPX. What does it look like?
Well, I'm just saying it looks like that. We had it lock up, and the Fed didn't have to spend $1, and LQD came all the way back, kind of like this did. So
yeah, they're not buying retail plays particularly, but the bonds within them are getting a little bit of care, right? There's
yeah. I have a question from Skip. He said, if there's time, please ask Samantha where she thinks the market would be if the Fed hadn't printed the recent QE.
1800. Absolutely.
Right.
1800 for SPX. Absolutely.
Okay.
Absolutely. So that was actually my my thesis. If we did not get saved, which was actually on 3/20, right before the Fed came in on that Monday the 23rd, that I thought the markets would close and that we would just open up down at that area.
All right. Yeah. Okay.
But and we might still go there. So this is another chart I'm going to show. It's kind of my closing chart because the market's going to open and I got a trading room I got to open and trades I got to manage. But long story short, this is
back as support.
This is volatility.
Yeah.
And I had been charting this basically down here. You can't even see it anymore because volatility was so exploded. This is the 3-month, by the way. So it's not your VIX, it's actually VXV. But long story short, I had spied this breakdown and then moved inverse head and shoulder, if you kind of go really small, with a trend line break that took everything out, including the won devaluation of 2015, including Volmageddon.
Yeah.
I mean, it was intense, right?
Yeah.
Well, guess where we are? Right
back
where
to the breakout.
we broke out. Danger zone. Having said that,
great look.
I am very long value plays. So I'll see how it does today and tomorrow. But that is my theme moving forward with a very cautionary look on the dollar won and volatility. And with that, I wish you a great afternoon and day.
Great presentation again, Samantha. Thank you for edifying our community today.
Oh, my pleasure, Dale. You take care. God bless.
You too. All right,
Bye.
Samantha Leduc, you could follow her on Twitter at Samantha Leduc. She knows what she's doing. She's a fisher woman and not a fisherman, and she'll show you how to fly fish like the guys in A River Runs Through It. Right? That's going to be a wrap for us. Remember, don't just count your pips, count your blessings. There's how you get a hold of Amanda, premium bundle, and her website at Leduc, www.leductrading.com. That's a wrap. Don't just count your pips, count your blessings, and we'll wrap up the week tomorrow. Thank you again, Samantha.
My
Adios.
pleasure. Bye.
Bye.